Hello everyone, this is Akshra Menon, and I'm thrilled to welcome you to the Alternate Universe webinar series. Today we'll delve into the topic Family Office 2.0 Future Proofing Wealth Management for Next Gen Ultra HNIs. In today's session, we will explore the growth of new ultra high net worth individuals and factors driving their wealth. We'll also discuss the investment strategies and lifestyle trends of ultra high net worth clients and how family offices are diversifying beyond traditional assets to reduce risk and capture alpha. The role of technology in enhancing family offices operations and strategies. Finally, we will gain insights from Nuvama on managing family offices and future of wealth management. To guide us through these discussions, I'm honored to introduce our distinguished speaker, Mr. Alok Saigal, with us today. As a founder of a family office practice at Nuvama, he introduced wealth structuring and estate planning services for ultra high net worth clients. He is a leadership wealth AU of crossed USD 41 billion, serving some of the country's top clients. Alok has over 25 years of experience and holds a master's economics in Delhi School of Economics. Let me introduce the moderators of today's session. We are privileged to have Mr. Vikaas and Sachdeva, Managing Director of Sundaram, as one of our moderators. With over 3 decades in asset management, Vikaas is a dynamic leader driving the growth across various platforms, geographies, and asset classes. We're also joined by Mr. Arjun G. Nagarajan, Commodities Fund Manager, Chief Economist, and Communications Manager at Sundaram Mutual. So, Arjun brings over 12 years of experience in the equity. Please join me to welcome these esteemed speaker and the moderator. Over to you, sir.
Thank you, Akshara. Today is a very interesting session which I'm looking forward to. I've had the privilege of working with Alok when we were together in Edelweiss, and I think Alok, you were one of the first people who took a full-fledged plunge into the family office segment. When I think the word family office was just being talked about in very hush-hush tones, and today when we talk about family office and future-proofing family offices, we couldn't think of a better person than you to give us your insights. But as is the privilege which I have, before I talk about this entire topic, it's something which I really enjoy the most, which is introducing the person behind the professional. Alok, me and my team, we've done some research on you. You'll be surprised by that, but we've been digging around trying to get information about you, trying to know what sort of person you are. And I must tell you that pretty much like you, the answers have been processized in the sense they follow a template. you know, almost everybody I spoke to had one of these three adjectives to describe: calm, measured, and focused. Okay, so this is something which the team thinks of you. By the way, they think very, very highly about you. They're in awe of you. And one of the reasons is that while your focus on business numbers is very high, they tell me you are equally focused on institutionalizing processes. So both the outcome and the process is something which you're very, very focused on. Your leadership style, they tell me, is basically empowering, giving a free hand to colleagues. You don't micromanage. That's not because you don't know what they're going to do, but it's that you have confidence in them and you have a lot of knowledge around the ecosystem in which they're operating. I think one of the key things I have heard about you, you're constantly learning, constantly trying to upgrade yourself. And this actually flows down the line, it cascades down the line. You encourage independent decision making. One interesting comment I got is that you always back attitude over talent. Whether it's somebody who's maybe underperforming a bit, as long as he's following processes and he's doing the right thing, you will back it. Or for that matter, if there is a recommendation which goes out from your firm and somehow it doesn't turn out the way it is, you will not let the axe fall on the product guy. You will back the product guy because everything has been discussed, debated, and then decided to be disseminated. Very often, when you're stuck with an issue or your team is stuck with an issue, you expect them to come back to you with suggestions and ideas rather than just wait for instructions. That again dovetails into your leadership style. I tried very hard to find out what irritates you. Okay, I really did try. But what I got was that when you see lack of initiative in a person, you do get displeased. So that's as far an adjective I could get: displeased, nothing else. You have a very measured approach to dissatisfaction. Okay, it was almost like I was hearing somebody talk about Dhoni. You don't raise your voice, but you're very clear about communicating your disappointment very firmly and objectively. And on a lighter note, somebody said, mostly during appraisal times. Your better half, Poonam, is a homemaker, and your son, Aditya, is 4.5 years old and is the center of your universe. Uh, I've known you for years, but one thing I did not, definitely not know about you is that you're a absolute foodie and a food connoisseur. To the extent that you're the go-to person when people want to take recommendations about food or cuisines or even restaurants. You can actually guide them to the right place at with the right cuisine at the right cost also. Your passion for food is very vegetarian currently, but you've been known to relish non-vegetarian earlier in your. You love samosas and kachoris, but your comfort food is dal chawal. That is how simple you are. But often your colleagues wonder the foodie that you are. How come you manage to remain so fit? Because you hardly take time out for yourself. One of the complaints your colleagues have is you hardly take leave. Okay, you're always immersed in work on numbers, and still you're quite fit, and they're actually quite envious about this. I asked about a few other things, and I came to know that you're pretty conscious about your wardrobe to the extent that it should be an appropriate wardrobe for an appropriate occasion. There is no such brand fixation. You're pretty pragmatic about the entire thing. But one of the things you got a massive thumbs up on was that during offsites, you don't discuss business. Okay, off business in offsite is what I heard, and I was also told, unlike some of your other colleagues in the organization, which make them work, the other teams work, you are one of the people who will completely be hands off onto this entire thing. So thank you very much, Alok, for coming on this show. It was a real pleasure trying to find out more about you as a person.
No, thank you so much, Vikas. It's my pleasure. And I think I'm feeling suddenly very good about myself hearing all this from you. Is what you say. थोड़ा मैं अपने वाइफ को भी सुनाऊंगा ये रिकॉर्डिंग कि
Yes.
देखो मेरे बारे में अच्छी अच्छी बातें करते हैं.
And you tell me which portions you want to be edited out as we
Yeah.
are more than happy to do that. But
No, but it's a pleasure. It's a pleasure. And thank you. Thank you, Vikas, for having me on this show.
I must also tell you that there have been a lot of people waiting for you to come on a show like this. We normally do these shows on Friday. We are doing this on Thursday, and the registrations have almost touched 600, which is
Oh,
quite unusual. So I think people are looking forward to hearing you
it's
speak.
very kind of, thank you so much. That's very
So
kind
let
of
me
you.
set the ball rolling, Alok. Okay, without
Sure.
any further ado. See, you've been in leadership position in Nuvama and the erstwhile NDTV both worked for in terms of advice for 10 plus years now. And like I said, you were one of the first ones to take a plunge into the family office segment. You literally seen wealth management industry morph and evolve over the last 10 years. I would wager the fact that what it was 10 years ago and what it is now, probably it's a 180-degree shift which has happened in terms of the industry. It'll be nice to hear your perspective in some of the key trends which you've seen over these years and how things have evolved. And how do you see the industry right?
Sure. So, because few things have happened. If you see last 10 to 15 years, India's wealth has grown. So first, if we see like the top of the pyramid, right? So at the top of the pyramid, if I just put India's GDP, so 10 to 15 years ago, India was almost 800 billion to a $1 trillion economy. Today, India is, if I see yesterday's data, it is touching almost $3.7 trillion economy. So India itself has grown almost three and a half, 4x in this period. And last 10 years have obviously been very, very good for India and maybe last 4 years also. So one, size of the economy has grown. And one of the major macro themes that I think all the entire financial services industry in India is following is that India will move eventually now very soon to a $5 trillion economy and then eventually to 10 and 15 and 20. US is right now a $29 trillion economy, just for record, and China is $18 trillion economy. Now, if you see how these economies and how wealth management industry in these countries have grown, you just need to see that India is actually witnessing something like that. Because just to give you a very simple sense, 10 साल पहले or 10 years ago, what wealth management industry was offering was, plain vanilla mutual funds, some bit of insurance, and that's about it. You really did not need a wealth manager. You're actually looking for a distributor to give you access to financial products. That's about it.
Correct.
Now, this part of the industry has become commoditized. Today, you don't need a wealth manager to provide you a mutual fund, which mutual fund to buy, and all that stuff, right? Because the size of the wealth has increased, the clients have become evolved. Therefore, the role of a wealth manager has changed substantially. So, one, I think these, because of the size, the role of the wealth manager has changed. Second, the size of the wealth itself has changed. 10
Mm.
years ago, what was 100 crore wealth or a net financial net worth was a very big number. Today, that number has become actually 1,000 crores. And that is the reality of how India is moving. I'll give you two very, and the third big color on the wealth management industry is the fact that the wealth in India earlier was concentrated in big cities. It is now moving into tier two and tier three cities. And wealth actually is becoming younger in India. As India is getting younger, the wealth in India is also getting younger. So these are the 3 to 4 overlaying trends. At the same time, what has happened is that the overall complexity, what was available earlier was very simple stuff. Now, the level of complexity and what is available to a client has changed. The canvas of products has completely changed. Today, people are looking at onshore, offshore, wealth structuring, estate planning, trust setup, taxation. So I think because the size has become meaningful, markets have opened up, there is a lot more access and availability of ideas and solutions. The actual need for a good advisor has actually come in more often, though it was always there, but it's there. The other part is that the number of wealth managers has mushroomed. So earlier
Mm.
there were,
Correct.
3 to 4 domestic wealth managers, you could count them. There were 3, 4 foreign banks and 2, 3 large domestic banks. Now there'll be, 30 to 40 homegrown, small, medium boutique wealth managers that are there. Foreign banks are trying to make a comeback. You have domestic banks which are doing so. And currently, obviously, with the economy doing very well for last 4 years and wealth effect happening, there's obviously wealth management has become a very buzzword right now in the last 3 to 4 years. So everybody and his dog wants to set up wealth management, and that is completely true and happening. तो ये हर इंडस्ट्री में होता है. This happens in all the industries when a lot of people start feeling that this is an industry which has a lot of potential, lot of profit pool. But what has also happened over the last 2 to 3 years on a serious note, the regulator has made the industry extremely well regulated. So in terms of, and you're part of the alternative universe and you've been part of the asset management industry, you've been a veteran of the asset management industry, you yourself we have all seen the way regulator has changed, the way commissions are set up in, alternative space, the way mutual fund commissions have been set up, the advent of direct plans, the way structured products, MLDs have been regulated. So the fact is now it's very difficult for standalone shops to actually operate. You need a larger platform and you need multiple, I would use the word hooks to work with the client to actually be able to make an impact. Now, nobody can be a one trick pony that I can be a distributor and I can actually start a wealth management shop. People may think they can do it and they will still try and do it. It's not that it's a free market, people try and do it. But now the way regulations have happened and the way cost of doing business has gone up in this industry, you need to work at a certain scale to be able to make an impact. So I'll pause here for.
No, no, it's very interesting. I think you've summed up 10 years of evolution in the last 3 minutes. I think it's fabulous. In fact, quite a few things. We've recently released a report on the family office segment in
Right.
India. And I think quite a few things which you're mentioning is also being echoed by these family offices.
Right.
So this is very, very interesting. But talking about family offices, you mentioned a lot of evolving trends in terms of wealth management. And if you have to move to the customer, the family office or the ultra HNI, have you seen any shift in the values and preferences of these ultra HNIs and family offices? Are people now talking more, for example, about impact investing, social responsibility, new asset classes like crypto? What is that you're hearing and seeing right
So I'll tell you from an investment point of view. I think one of the things that has happened is that the family offices have become a lot more evolved. Or ultra HNIs. Let me club ultra HNIs and family offices because
now?
India, it is a little loosely used.
Correct.
Anybody who starts becoming a certain size and above, it's actually then starts getting classified as a family office, though they may have a formal setup or not a formal setup.
Correct.
But this segment of investors have actually become a lot more evolved. And there are two reasons for that. One, as I touched upon briefly in my previous point, is that a lot of the newer generation is coming into play. The newer generation actually is largely has a lot more exposure than their parents. They are foreign educated. They
Mm.
have met and worked in a certain circle with their peers, and a lot of their other family, children of other similar families have studied with them. So when they come back, they are actually attuned to look at, and they're also seeing the global trend. So one setup that is happening is that they are attuned to take slightly more risk. They are looking at, professionalizing the things. They are
Mm.
realizing that the capital is sizable. So should I set up a proper professional family office? Should I set up proper professional teams? And the realms of investments in terms of assets that they are looking at. So right from, private markets, right from venture capital to, doing direct deals in early stage companies to, private equity transactions to credit transactions to, a lot of these things have come into play. I have personally, I will answer the point on social and impact investing. So the trend we are seeing is that a lot of these families are trying to give back to the society in different and
Mm.
different ways. But the way I have seen it, and this is from my experience, and it may not be for the whole industry, but I can tell you from the experience and the clients that we manage, to a large extent, we are seeing that they are trying to make an impact to their own communities, through their own native villages, or they're trying to set up certain institutions like schools, colleges, charities, etc., in their native towns or in their communities. And I think it's their way of giving back, and it's very noble. I'm not seeing that much proliferation of impact investing, obviously, and because in India, even today, there are very
Mm.
few impact investing opportunities available. And and that is very relevant for smaller family offices because they may not have the wherewithal to actually put up a full setup and follow through for setting up schools or funding educations or whichever need they are looking to fulfill. For them, the impact investing route or partnering with a an organization or a fund makes a lot of sense. But I have seen larger families actually doing it directly. They are actually trying to uplift the communities, the villages, or the native places that they are coming from, and that is definitely happening.
Very interesting. I've got my colleague Arjun on the standby. He's got a bunch of questions. Arjun, why
Sure.
don't you go next?
Thanks a lot. Was lovely to have you on the show. I
Thanks.
just club two quick questions. So you made a mention talking about how wealth is actually getting younger in India. So given that one of the key client segments for Nuvama is family offices, um, can you sort of talk about the nuances you find between family offices and other institutional investors? You also made a mention that because they're young, they're also open to being taking a little more risk. Is it calculated risk or is it more a sort of FOMO in a certain sense? So if you can sort of touch upon the nuance between institutional investors and differentiating them from how family offices sort of look at the AIF space, and if there's a ballpark you can throw as to what percentage of asset allocation do a family office AIF space. These two questions, I'm just clubbing these two together.
Sure. I'll give you one data point, and I'm sure you and Vikas are in the alternatives space, so you'll have this data. But for the audience, I'm giving this data point. 10 years ago, India's AIF industry was $3 billion. Today, it is $60 billion, 60, in 10 years' time. If you look at any, and this is only the AIF industry, alternative universe is slightly broader than the AIFs. But I'm just trying to connect two, three of your questions. So if you look at the family offices today, family offices in India have emerged as a very, very relevant and an important investing class. So these investors have become very sizable. If you look at both in private markets, uh, you look at pre-IPOs, private markets, look at private credit, private debt. These investors have become very sizable. Recently, when mutual fund regulations changed about the taxation on debt mutual funds changed, the credit AIFs became a very, very large space. And the entire, in no span, 2025 credit AIFs spurred in India, and they've raised reasonable capital. Each fund is between 500, minimum 500 to, 1,000, 1,500, some 2,000 crores. Now, there has been appetite for all. The fact is that who are the investors in these are family offices. So let me paraphrase your questions now in a structured manner. One is that, are they looking to take more risk? The answer is yes. But they are not all of them, but a lot of them are following a method to the madness in terms of, a detailed investment policy statement, looking at detailed asset allocation, thinking through their asset allocation. It's not that, if equities is doing well, so I will move 100% to equities. That's a rare, that's not that there will be certain family offices which are 100% equity. Let me tell you one more data point, that today, if you see overall family offices, even today, are under allocated to equities. They are in their portfolios, they will be between 20 to 30%. They'll not be even 50%. On an average, I'm saying there'll be family offices which are 70%, 80%, and 100%, but I'm giving you an average. So they have followed an asset allocation. There is a method in terms of, bringing in newer asset classes like REITs, InvITs, some structured products, commodities through gold, ETFs, etc., international investing, looking at currency diversification. So there is a lot of method to this madness in terms of there. Having said that, is there a FOMO on certain things? 100%. You look at Swiggy pre-IPO, everybody, I'm not making a generalist statement, everybody has bought Swiggy in pre-IPO round. Everybody. Or everybody has been shown by, the wealth management fraternity. And, I do not want to pass a judgment whether it's good or bad. I can only decide whether we want to do it or not. But the fact is that everybody has been shown and a majority have participated. So that is one FOMO we definitely saw, But having said that, overall, people do follow a framework. There is a fair amount of, processes that get followed. And it's a part of an evolution. The wealth in India today is first and second generation. You remove 20, 25 business families which have been there for, 50, 80, 100 years. You can count that, on a list, it can be, 50 or 100 families. But beyond that, the wealth in India has created in the last 20 years is all first generation and maybe second generation. So unlike the West, where it is, third, fourth, fifth generation that is creating wealth. So India is also evolving. So a lot of this is evolving in terms of, how they are setting up their family offices, what structures they have. A lot of people are working with a full-fledged professional setup. Some people are working with external advisors. So see, the entire process is getting evolved. I would say over the next 3 to 4 years, I expect. But in my experience, last 3, 4 years have seen a lot of evolution in terms of how they are dealing with the entire, approach to investments. And the openness has increased a lot more. Earlier, they would be a lot more closed. So that openness has increased. So I would.
Fair enough. So the way you handle family offices and the way you handle institutional investors, I'm assuming it'll be fairly different. Any one obvious nuance and approach, if you can sort of highlight as to what stands out for you as to the difference between an institutional investor and the way the family offices look at it?
So I will flip this a bit. I'll also answer family offices versus regular. I will not use the word regular HNI, but a HNI or a individual ultra HNI, and family offices and institutions. See, in family offices, the evolved family offices and the large family offices, you're ultimately on a day-to-day basis, your team or you are not dealing with the principal. You're largely dealing with a team, which is a team of professionals like people like you and me. So their relationship has some value, but your relationship manager's ability to put the direct advice across, your ability to add value has tremendous value, because you're dealing with a professional. You're not dealing with the principal there. And there, if you're adding a lot of value, you start moving into an advisory relationship. And if you're not adding value, you move into a transactional relationship. It's very clear. So So you move up the curve of relationship to advisory moment only if you, as a platform and as an individual, you're adding value. And with family offices, the individual is not dealing. Ultimately, all parts of the platform or the firm are dealing, because he's also dealing with your investment banking team, he's also dealing with the institutional equities, he's dealing with research, some parts with asset management, some parts with the wealth. So there are so many touch points that he's dealing with, because he's dealing with the whole institution. Versus when you're dealing with an individual HNI, you're dealing with the principal. So the RM's skill set and ability has to be slightly different. His ability has to be able to connect with the principal. His ability because that person has reached a certain stage, he's got the wealth. So your ability has to be in dealing with that person, build the relationship, also adding value. It's not that I'm not taking away the fact. So, but the two roles are slightly different. There
Fair enough.
it is you're dealing with the individual, and obviously institutional is again, institutional is slightly similar to the family offices, because there you are again dealing with professionals at the end of the day, and you're providing them certain services. So I think that's the broad difference when you're dealing with all these people.
Fair enough. Fair enough. Over to you, Vikaas. I think you had some follow-up questions on the skill set part.
Yes, thank you, Arjun. This is a very fascinating discussion. You're actually unraveling the mind of an ultra HNI and family office, and to most of us, it's very interesting. Uh, while you're talking about that, one does realize that there are certain skill sets our industry, as in the wealth and asset management industry, also needs to develop to cater to this fast evolving segment of family offices and ultra HNIs. So, do you do some of these skill sets immediately come to your mind that these are the must-have skill sets which we need? And a follow-up question to that is, are these skill sets freely available, or do you need to groom, train continuously people to move to that?
So I'll tell you, the sad part is that nothing is available. So you have to work very hard to put together, train your teams, etc. But one biggest skill set that today is required to deal with, ultra HNIs and family offices is your ability to add value to their life. See, what has happened is that today, if you look at the overall, and I'm not trying to, run down anybody. So please, I'll apologize
Please.
in advance
Yeah.
if so I'm not trying to run down anybody. But if you look at overall banking setups or large setups which are running, retail and, affluent and all these wealth management setups, what happens is that you have a large team of relationship managers, and then you have these ICs, and a lot of these people who go to the client and say, okay, so here here is my credit card specialist, here is my home loan specialist, here is my investment specialist, right? So the RM's role in most of these places is to connect the dots, to connect the dots, and that is how these setups operate. They have a specialist for every single thing, and the RM's role is to connect the dots. In When you traverse to the ultra HNI and family office space, RM is the whole and soul. RM is the face for the client. RM has to do 50 to 60, in some cases 80, 90% of the work. He should know, if he's talking about markets, he should know something in detail. He should know what is happening in the US economy. He should know what has happened last night with US, how it is impacting India. Because the client will ask him.
Correct.
The second level is that, yes, I will get a call done with my macro specialist and my research, but the first point of call is the RM. And if the RM says, sir, I do not, RM will not say, I do not know, but he said, let me get you on a call. It doesn't work. The client will stop talking about it. So I think knowledge levels in this industry and ability to, I'll say two things: ability to have sense what the client needs and stitch it back with the platform. That sensing the client needs, and either you can have an approach ki you go with a suitcase and say, मेरे पास सर ये 10 चीजें हैं, इसमें से कोई आपके यहाँ मैं fit कर दूंगा. That is the traditional approach that wealth management industry everywhere follows. Or the other fact is that I will sit, understand, and realize what the client actually needs, and let me create something for him, or structure something for him, or offer him something. Second is your ability to converse and add value to the client at a knowledge level. The these clients are very discerning. Most clients will not even give you a second chance when you're dealing at this level. People who have made few thousand crores and you're at the top end of the spectrum, they don't give you a second chance because the world is available to them. So you
Correct.
really need to stand out. So in my mind, these two are very, very important skills. And third is obviously then making this connection, ability to stitch together stuff and do all that. But this knowledge is a very, very critical skill. It's very underrated. It is extremely underrated. But the way we have tried to position our bankers is that we do a lot of work with them. We take a lot of pride in the fact that our bankers and our whole approach as a platform, and this is not a Nuvama this thing, but our whole approach is that we are a knowledge first firm. We want to be intellectually driven. We want the clients to talk to us, and our bankers are their ability to talk on global markets, domestic markets, various economic factors, etc., which are relevant to the client's life, and also add value in clients' businesses, industries through our research, macro, through our investment bank. A lot of times we are sharing so much knowledge with the client where there is no business involved. But the
Hmm.
fact is, I think 80% of the work that we do with the clients today is sharing ideas, knowledge, and creating these forums, etc., where there is no business involved. Business is an ancillary thing. But the fact is that is the firm positioned that way? And does the client seek Nuvama out or the banker out for what he's able to add value? If we have succeeded in that, then you're creating a mark. Because how do you otherwise can sustain an access? Yes, you've
Correct.
sustain an access because product is not access. Most people think that I have give you one great, beautiful, sexy product that will give me access. That is one transaction.
True.
Then you have to bring the second sexy transaction. My thing is that I'm going to do the knowledge part, but I'm going to keep on giving you also the sexy transactions. But my positioning is not the sexy transaction. My positioning is knowledge, and I think
Very
that
well.
is a big
Very well.
differentiation.
Very well put. In fact, that probably brings me to a diametrically opposite question here. You talked about the human angle. You talked about skills, upgrading skills, and three pointers in terms of what needs to be done. A lot of people today have come back and have discussed with people like me about the fact that AI and data analytics will eventually take over either what you call the sexy product part of it or the knowledge sharing part of it. One of the two will be made redundant by AI and data analytics. Okay, and that one, is that true or not? And two, if it is true, then how do you leverage this technology and digital tools to fulfill that?
So I partly agree and partly disagree. So AI is a tool that we need to leverage for our benefit. Some of the core skills that are required to be in this industry, that is very difficult to be replaced by AI. So after you have hit a certain level of wealth, I don't think you will want to talk to a bot to tell you what to do, right? You'll want to sit and talk and, because relationship with a client is not only about money, it is about so many other things. So maybe human beings will evolve to a certain level where they lose the need to, talk to anybody in next 10, 15, 20, 100%. But what AI is doing, and I take a lot of pride that we are at least we are trying to see how AI can best we can implement and adapt a lot of AI tools in wealth management, both to improve RM's life and the client's life. So I'll tell you a few use cases, and it's a bit of a things that we have been playing around with and trying. So to make bankers' life easy, we have put client profiler tools. So because typically when client bankers go for meetings, they read up, study about who they are meeting and profiles, etc. So that now AI is able to generate and give you a prospect profiling in a very interesting way. A lot of company data, especially for publicly listed companies, even unlisted companies, AI is able to pull out a lot of corporate data, individual data. Sorry. So all that is
Very
makes
interesting.
bankers time available. Staying on the banker, the other part that we are trying to do is a lot of the, on the portfolios. Now because portfolios are becoming large and complex. So with the help of AI, we are trying to give them a portfolio summary and portfolio tools that, can AI give the banker a quick summary of, what's doing well, what is not doing well. So he knows where to concentrate on when he's doing a review and conversations with the client. So our effort is, can we save the bankers time? The third we are trying to do is, similar thing, which is very easy now, is, you have detailed product decks and so many complex presentations. Can you summarize, give key, one pagers, two pagers that are easily available? So these are right now the use cases we've seen on our bankers side. What we are doing is also, we are one of the places we see a lot of time gets taken up is, in portfolio build outs, portfolio reviews, etc., analysts and all. बेचारा वो लोग एक एक दो दो दिन तक पूरा एक्सेल लेते हैं, एक्सेल को कन्वर्ट करते हैं, पीडीएफ मंगाते हैं, पीडीएफ को कन्वर्ट करते हैं. सो वी हैव बिल्ट आउट एआई टूल्स हियर, ऑल पीडीएफ्स कैन बी कन्वर्टेड इनटू एक्सेल्स. Portfolio builders can be created. So you put in the your templates, you put in the IPS, and you put in his existing portfolio. So basic portfolios can be created, and then the analyst can start analyzing. So what we are trying to say in a nutshell is, a lot of the rudimentary stuff, where a lot of time, gets wasted today, can we simplify that with AI? And that is something that is the first use case we've done. And all these have gone live, because so none of this is conceptual. All this is live. So all this is live. These profiler tools, product tools, etc., all have gone live, and bankers are using it. So we are also learning, and we are constantly thinking how, we can better bankers. So we are very focused how we can better bankers' life and how we can better the client's life. And we have also been done a lot of work on digital, not only non-AI, digital stuff, in terms of, one of the biggest pains in wealth management industry is, account opening. Client has to sign a bada thappa of forms, you're aware. So we have tried to simplify that through, various things. Account opening has been fully digitized by us. A lot of the products have been fully digitized. So we have done away with completely paperless. We've made it completely paperless account opening. So a lot of effort has gone into, how we can use technology to simplify people's lives. We don't want to do anything बहुत बड़ा कुछ हम big bang में अभी नहीं
Simple things.
simple stuff. If we can keep on adding efficiency every single day, that's what we are focused on right now.
Amazing. Arjun, over to you.
It was wonderful to hear you detail all of that. So that incremental 1% every single day, I think that seems to be the motto there. So I'll add a couple of questions. I think Vikaas has many more questions to ask. I'll just ask two questions. I'll just club them together. So now Nuvama Private, they've expanded its operations into the Middle East through the DIFC. Now, probably because Dubai has the highest wealth concentration in the Middle East, I'm probably guessing. But could you just touch upon now ultra high net worth families? Are their needs becoming increasingly global? Could that be one of the reasons why you're actually foraying into DIFC? If you can touch upon your thought process, your reasoning on foraying into DIFC, that is one. Second, when you interact with family offices, and you mentioned that wealth is getting younger in India, anything that stands out to you from an attitude point of view, how they are looking at wealth, a shift from how their earlier generation was looking at wealth? Do you see any soft angles, any very different perspectives there? If you can just share these two.
Okay, two very different questions. So
Yes.
let me take the second one first, and then I'll come to DIFC. Let me give you one simple data. 10 years ago, in the rich list that gets published, so, whether it's Forbes or Hurun or any of these, if you see the top 1,000 families in India, and 10 years ago to now, the average age of the billionaire or a person on the list. So not all people on the list are billionaires, but top 1,000 I'm talking about. The average age of a person on this list, the average age 10 years ago was 56. Today, what is the average age?
28, 29?
45.
Oh, okay. Okay, I'm too optimistic then. Okay.
But there are 288 people
Uh-huh.
on that list. Out of the 1,000 people, there are 288 people on this list who are between the age of 35 to 45. So it is a big number. 30% of your list is actually below 45. And so this is two very clear trends are happening in India. The and I'll give you one second trend, and I'll combine the two. The second trend is that same 10 years ago, all the wealth, 70% of the wealth was in three cities in India. Three cities.
Ah,
Today, this list of 1,000 people comprises 76 cities.
wow.
So there are two clear trends in India right now. One is that wealth is getting younger, and wealth is also getting generated and residing in tier 2 and tier 3 cities. What was happening earlier was that if you were in Jaipur or Surat or Coimbatore or any of these cities, Bhubaneswar, the family will eventually have the plant or the business in that city, but they will migrate to the next big metro. No longer happening. These families are now staying put because the quality of life in these cities have improved. You're anyway shopping in one of the metros or internationally. You're holidaying internationally. Your cities now have EOs and entrepreneurs organizations and YPOs. So your social network is there. All your friends have studied abroad and you have studied abroad, but everybody's come back. So what I'm trying to say that tier two wealth is now staying in tier two. That is there. And wealth is genuinely getting created in these cities, and the wealth is getting younger. These two things have now leading to two very big changes. The attitude towards wealth is become very professional. It is making it very investment oriented. What earlier used to happen is that suppose I have a company and I pass it on to my son, and then I pass it on, my son passes on to the newer generation. Now the newer generation is saying, yes, I have the company. I'm happy to be on the board of the company. The but I need not be running this company. It's an asset in my portfolio. It's a bit nuanced, but it is happening. I'm not making it a general statement, but it's happening to a large extent. Where the next generation is saying, yes, this is I own this company. My family owns this company. Yes, I'm happy to be on the board. I'm a very happy shareholder. I'll contribute, but through the board. And I can give you countless examples. It's not right for me to take names here, but I can give you countless examples of families where the next generation is not moving in the active business. They have hired professional CEOs, professional managements to run the companies. It's an
Wow.
investment for them. And this is happening. This has happened in the West. It's happening in India. Because as your exposure increases, they are saying, I want to spend my time in five other things. I want to create five other companies. Maybe I want to start some new businesses. I want to create some startups. I want to do only investments. I want to do multiple things. I don't want to be focused on one company. So that's a big generational change that has happened between first generation to the second generation. So that is the first thing that has happened. But if you need to do this, then you need to set up a professional setup. You need to have professional structures, proper structures to dealing ownership and management. So therefore, this evolution is happening. And you'll be surprised this evolution is happening in tier one, tier two, and tier three cities.
Ah.
The exposure is happening everywhere. So
Hmm.
professional setups are coming in at least tier one and tier two cities, and this evolution is happening. And with this evolution, you bring in professional teams. You start managing money in a professional way. You start thinking long-term asset allocation. You start thinking about that way. It automatically changes a lot of things. So that is, I think, a big change that is happening in India right now in the family office space. And to answer your first question on Dubai,
So,
so we recently, it's now 6 months, we got a license to be a wealth manager in Dubai. And we started our operations. See, there are two very simple reasons to operate in Dubai. As you rightly said, Dubai is obviously the gateway to Middle East. What is also happening is that Indian families are increasingly looking to diversify out of India. And see, all said and done, if you have an X amount of wealth, you may do all the asset allocation in India, but 100% of your wealth is in one asset class, which is Indian currency, Indian rupee. So you
hmm.
are ultimately in a single asset class. So
True.
families are saying maybe 5%, 10%, 15%, 20%, I want to diversify. Second is related to the point I made first just now, is that the family kids have studied abroad. Their children are going abroad. So there's a need to, have some base outside India in terms of either a property, some foreign currency. So they are also planning ahead. So they are also saying that, okay, I might as well use the LRS limit and do that. So there is one very basic stuff that we are doing in terms of, and then there are families which want to actually set up family offices. diversify outside India, they may have businesses outside India, which is giving them capital, and they want to work with a firm that they are comfortable with in India. So this is one setup that we are looking at, and we are already doing a lot of work around this. And GIFT City has also become a very interesting place to operate out of right now for outbound and inbound. And the second is we are also looking at, there's a substantial NRI and people of Indian origin population in the Middle East. We're also starting Singapore. And these two are the hubs we're starting with, where there's a substantial NRI, people of Indian origin population. And they are also looking at, unique and high quality India solutions, to invest rather than just plain vanilla direct equities or bonds, etc. So they're also looking at that. So we're capturing this, trying to capture this spectrum of investors right now.
Fair enough. That's really fascinating. Over to you, Vikaas. I think I'm sort of maxed up on my space. Time.
Actually, we seem to be maxing out of the time available. I still have tons of questions, and I think audience questions have started coming in. But before I move to audience questions, I think let me just ask you two last questions, or last two questions, if you will. One of them, I think, has just been asked by Reshmi in one of the audience questions right now. And I had this question with me as well. In terms of the fact that India is relatively new in the pecking order of family offices, we're just about starting to grow. Some data which I saw that globally there are close to 10,000 family offices. India is just around 300 plus at this point of time. So one of the things which one I would want to know, and I think the audience will be keen to understand also, is what lessons can be learned from the global family office. They've been around for a long time. They've been future proofing their whole businesses for a long, long. So what are the learnings Indian family offices and to that extent Indian wealth managers can learn from the global family offices which have survived for so long?
I think the biggest lesson is that having your, it's a very simple thing I'm saying, but the biggest lesson is having your thinking right. Most family offices are not able to think through long-term usage of this money. What happens, Vikas, is that a lot of these families, have a lot of these are which are coming up now. And I'm not talking about, the old family wealth in India, which has been there for generations, but I'm talking about the bulk that is coming in now. They're seeing first generational wealth. Now, and a lot of them have also had liquidity events where they have sold part of their businesses or done IPO and all. So after you bought your big houses and you bought your big cars and you've done your foreign vacations and you've bought every possible brand that is available, then people have to think really how to create a legacy for the long term. I think one of the things that the West has taught us is that think of family offices or family capital as a perpetual capital. Think really long term and think how you can create a governance structure, processes around, and what is the real objectives that this family office will achieve, which is multi-generational. And we have seen this in US and Europe and some bit in Japan, where family offices have been around for hundreds and 200 years. So there are family offices which have been around for 300 years. Europe and US has been a lot of family offices have been around for 100 plus years. So, but they have created very, very solid governance structures, family charters, created family boards. And as the family wealth size starts becoming very meaningful, I'm not saying India is not doing it. We work with families which have put in place beautiful structures, governance boards, family charters, and their objectives very clearly. Because I think most people confuse family offices with just an investment office.
Correct.
Most people confuse that, family office is investment office, and therefore they get stuck with, basic asset allocation, and that's about it. And so if you can think of this, just summarizing as a perpetual capital, that is one. Second, I don't think there is any need for having a FOMO. And obviously, Indian markets have behaved the way they have behaved. So there has been a lot of stuff that has caused a lot of FOMO in India. And I have seen that, there are family offices which have dodged a lot of bullets by, not participating in some of those FOMO trades. And, it's not appropriate for me to name some of those trades which, were trading at X valuations and suddenly have now almost gone close to zero. So I think smarter families have avoided those or dodged those FOMO bullets. So I think that is there. Putting your processes, systems, structures, and really thinking, what you want to achieve with this family office. I think that clarity is missing. It just becomes an investment office and it's treated like an investment office. But there are smarter families which are, doing a lot more.
It's a beautiful distinction between family office and investment office. I mean, you just completely unravel the entire piece. Yeah. So earlier during this discussion, you were talking about the average age of people. And
Right.
my last question to you on this show before I move to audience questions is most of what you just said in terms of governance and avoiding FOMO and all of that, a lot of middle aged and above people in a family office setup promoters would understand. But like you rightly mentioned, there are a lot of younger guys coming. The average age is dropping, right? Who don't have the perspective that the senior guys have, and have a lot of confidence in themselves, which is not wrong, but they have a little too much confidence in themselves. So if there's one piece of advice you want to give, then let's imagine that this is a 35 year old person who's run into a lot of money, generational money, okay, and you are the person who's going to advise them on the family office. So what's the one piece of advice you would want
I'll say two. Take your
to
time.
give?
Firstly, take
Okay,
your time,
wonderful.
because we get asked this a lot, and this is
Mhm.
my answer to all of them.
Mhm.
To I said, take your time. Don't be in a rush to, start investing, and understand what you want to do. Because it's very interesting, because I met somebody today morning, and he's possibly 32, 33, and similar situation, and he identified that the family came into liquidity, and he identified that he wants to be in the investment space. He's worked very hard on himself in terms of honing the skills, developing the skills, burning some hands in terms of certain investments, but setting up a proper structure. So the first is, I think, clearly taking your time
Mhm.
and write down what you want to. I maybe sound like a broken record, but what you want to achieve by this, because you will make 1,000 crores, 2,000 crores, but or you want to make 1,000 crores, 10,000 crores, or you want to say that I'm not right now looking at 1,000 becoming 2,000 or 5,000, but can this family office last for the next 50 years, 60 years, and 100 years, and what are the things that this family office will do? So I think thinking very clearly the objectives of the family office is very, very important, because most people don't think of family office capital as perpetual capital. Most
Mhm.
principals don't think, and the people who are able to think is their investment decision making is very, very
Strategic.
strategic, and they start thinking very differently. Because if a person is, like you rightly said, if the previous generation is coming who have
Mhm.
run actual businesses, when they are investing, they are actually looking at the business and not the price. They are seeking value in the business, and most people who don't have experience, they actually start seeing the price and not the actual business. So that's also happens. So I think summary is, that take your time, write down your objectives, think clearly in terms of long term what this piece has to achieve, because पैसा तो आपके पास आ गया है, अब आप कर लो, पैसा तो अब आपके पास है, तो आप टाइम ले लो ना, what is the hurry? So I'll pause here.
Amazing. I think this is, I just put myself in the shoes of that character, and I think you just hit home.
Mm.
Perfect. Now I'll just go straight into the question answers. We have around 25 comments, stroke questions coming in, and probably not enough time. So I'll just very quickly go through some of them, and you can decide which is the best question which will come.
So,
Okay. You just mentioned Pankaj Parmar while saying it's a very good discussion. Asked you for clarity on the word young wealth. So that would mean younger people inheriting wealth. That is what you mean,
young
right?
people also creating wealth, young people inheriting
Creating wealth.
wealth, young people also creating wealth, because they would have created startups, sold their businesses, so they've also created wealth. So let me give them that credit.
Wonderful. Mrinal, I think Alok started off by giving some indication about the current and potential market size of the family office. I think that pretty much answers what you're asking. Reshmi asked about the human angle and right knowledge plugging in family offices, etc., etc. I just blended that in terms of learnings from global family offices. Akshara Saravanan is asking, with India's evolving regulatory landscape, especially in areas like taxation, succession planning, and offshore investments, how do you ensure that your strategies are both compliant and optimized for efficiency without exposing the family's office to undue risk?
Fair point. So see, we it's a very simple answer. We obviously will never put clients at risk. we have a very strong in-house team, which has come from the Big Four. Plus, we work for execution. So we play the role of an advisory, where we are advising, and the advice is very well qualified because the team has the requisite background and expertise. So it's not that people without expertise are giving that advice. And the second, all execution is done by very reputed firms. So we work with all the top firms on the law firm side and taxation side, accounting side, and offshore side. We work with the best. We don't work with anybody who's not amongst the top firms. So I think we try and ring fence, obviously, and it's a collective decision making with the client. We come from a very conservative background in terms of a lot of times our conversations with the client are on the other side, where we are saying ki, this is something we feel it's little gray, we should not do. And especially right now, because regulations on onshore, offshore are still evolving. So they're still evolving. So we are taking always a very conservative view in some of these things. So I hope that answers the question.
Beautiful. Vijay is asking, what do you think will India become? When will India become the third largest economy of the world? I will just borrow a phrase from Alok. इतना जल्दी क्या है? हो जाएगा. Okay, it'll happen. Uh,
हो जाएगा, बहुत
H,
जल्दी हो जाएगा.
बहुत जल्दी हो जाएगा. H. Devnath is asking about the fact that sometimes family offices behave like retail investors and go shopping around for the best deal. How does the new age wealth manager work on differentiating in this war for pricing? And if pricing is key, offering from wealth manager getting commoditized. I think you answered that when you talked about the sexy products and the knowledge and all that. I think you did answer that. Shubham's asking, what are some of the recent trends in alternate asset class that can add value for family offices? I think we discussed trends in family offices. He's saying, what are the sexy products that you see? Just the asset class, not the names of the products, which can add value for family offices.
So I think a lot of people are now waking up to the fact, that right from early stage investing to, so it's very market linked, right? So if there's a 2021 where private markets were having a crazy bull run, everything was attracting too much money, and public markets were still trying to come out of COVID, and private markets were having a crazy bull run. Today, it's the opposite. Public markets are having a reasonably strong bull run. Last 10 days notwithstanding, but they're having a crazy bull run. So people are trying to spot opportunities in the private markets. But having said that, I think there are opportunities in a lot of interesting new asset classes have come up in India. So the startup space has really evolved in terms of venture, early stage, mid stage, late stage. Venture debt has evolved. You have now REITs in which linked to REITs and InvITs, now you have strategies which give you pre-REIT, pre-InvIT funds. Like a pre-IPO, you now get a pre-REIT, pre-InvIT fund. Credit has become a big space. Commercial real estate has become a good space. Warehousing has become a good space, and international investing. So I think the space is widening almost every day. I think real assets have become a very large space. People are now ending up owning real assets, whether it's a warehouse or a commercial property or a road asset or a transmission asset. And I think that's thanks to SEBI in terms of the way they created the REITs, InvITs, and a lot of these things and regulations have really evolved. So I think it is a combination of a lot of stuff that is now being made available in the markets, but it's also in terms of it's a function of asset allocation and market behavior. Both these actually override everything. I'll say that.
So, Priya, I think you asked about Indian startups, and Suman, you're asking about rise of alternate assets. I think to some extent, Alok has given some answer. H. Devnath is talking about a lot of millionaires migrating to other countries, giving up on Indian passports. Is there trouble brewing underneath like it's happening in China? That's an interesting question. On one hand, we're talking about third in the world in terms of economy, and the other, we're talking about trouble under the surface. Very quick answer to that.
I don't think so. I see we are a growing economy, and as any economy develops and you start creating more wealth, and India has a large population, and a large population of by reason what will happen is over the next 5-10 years, India's population of HNIs and ultra HNIs will also increase. So the fact is, if some parts of the family, बच्चा पहले ही पढ़ने गया है, बच्चा बाहर चला गया है, आप एक एज के बाद बोलोगे यार अब मैं my investments are in India, I can stay anywhere. I think Indians are also becoming slightly more mobile and global citizens. And gradually, what is also happening that, a lot of, I think this passport thing is a little overrated, if I can say that, because, a lot of people may be giving up passports in the short term, because, it just gives them travel convenience. अगर किसी को बहुत ट्रैवल करना है, ट्रैवल कन्वीनियंस हो जाता है, बट द वे इंडियन पासपोर्ट इज बिकमिंग स्ट्रॉन्गर, ये ट्रेंड भी काफी रिवर्स हो जाएगा. आई डोंट थिंक पीपल आर गिविंग अप इंडियन पासपोर्ट टू मच. इतना कोई बड़ा स्ट्रेस वाली चीज नहीं है. Neither is it that it's happening in droves. It is just a fact that, it's a lifestyle thing. So we should not read too much into it.
So BKS is asking about wealth management. Is it available only for institutions, suitable only for institutions like family offices, or can salaried individuals access such professionals? Vamsi
Absolutely.
has got a follow-up question. Do you have business to business B2B Nuvama Wealth?
Yes.
So I think you could probably just write in, and I think PMS Bazaar can collate these queries. Alok, if it's okay with you, they will send it across to you, and you could have somebody look at these queries.
Absolutely. Absolutely. It will be my pleasure.
Parth is asking about your view on whether current LRS limit should be increased. I don't want to put Alok in that sort of situation right now, but I think
Yeah, I think
increase
the
is
current
also
limit is good.
good enough. Okay.
Yeah.
And he's also complimented this being a very insightful session.
Thank you.
AJ is asking about instances where ultra HNI generation takes impulsive investment decisions. I think you answered that in a very different way in terms of take your time, which means that there are people who take impulsive decisions. Expectations of family offices and ultra HNIs. Saurabh is asking, I think you answered that. Last few questions about Alok, you mentioned about a formal, larger setup to be able to serve the growing demands of the HNIs and ultra HNIs properly. But it's difficult for individuals and smaller startups to create that, although they already have HNI, ultra HNI clients. So how can they collaborate with Nuvama or such larger institutions? Very interesting.
We are happy to collaborate. In fact, we collaborate with a lot of firms in terms of, in a formal tie-ups, so they can separately reach out to us, and we can do that in terms of, we are happy to provide our platform. And
That's effectively what is B2B, right? Which is what we talk
yeah,
about.
that's B2B. So we are happy to provide that.
Great. Valkyrie Investment Managers asks, what is a smarter way to get noticed by these family offices for a small investment firm? I think one part is to get aligned to a larger platform, and two is to basically upgrade your knowledge. I mean, I'm just oversimplifying things in the interest of time.
Absolutely.
So there are a few questions coming in. Again, Reshmi is asking about family office behavior in tier 2 cities, which you've talked about. What is the quantum of wealth when one family or investor should think of a family office?
I think
Judge is asking this.
when you are a typical size of, financial net worth of north of 500 crores, it's a good number.
I'd just like to answer this question slightly differently. And this is what an HNI, ultra HNI investor told me when I was asking him. I'm pretty inquisitive about these things. So he told me, Mr. Sachdeva, this is a mindset. Family office is a mindset. You may not even have the money to qualify yourself for a family office, but if you have the mindset, you'll eventually reach there. Okay. So I thought that was very profound. And it gave simpler mortals like me some hope in life. So I'm just latching on to that. So yeah, I think that's pretty much okay. Somebody just asked whether they can apply for a position in your Dubai office. I think you can just write to PMS for that. But this has been a very interesting session. I think whom should we give the question for the best this thing? I think there was this question about China and passports and all of that. I think would that be? It's a very different question. Would that be a question you would want to give? Yeah?
I think we can give that. I think
Okay,
it's
wonderful. We'll give that. So thank you so much, Alok. This has been a riveting
Pleasure.
discussion, and I think I speak for all of us. We've completely enjoyed this. Thank you so much for all your insights, data. Your breaking into Hindi and explaining it better. It just takes away the entire sort of mystery around family offices for all of us to understand. Really enjoyed this.
Thank you. Thank you, Vikaas. It is my pleasure entirely. I genuinely enjoyed this interaction and look forward.
Thank you.
Thank you.